Whether the recent bank collapses have you startled and questioning your security when it comes to your savings, or you finally have enough savings to be concerned about its well-being in the financial system, you may be wondering how safe it is to keep your money in the bank. And if not, what are some of the better alternatives in keeping your additional savings? We're going to cover that in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So if you're catching this video, fresh, then it's probably going to be early April of 2023. And we've just recently, in the last 3 or 4 weeks, experienced significant bank collapses in our financial system here in the US and some serious shakeups in the banking system in Europe with some significant sized banks there. So the headlines are in, and you may be wondering, how safe is my money in the bank? How does the FDIC insurance policy, work on my deposits? And, should I be keeping my money in the bank? How much money should I be keeping in the bank? And where should I be putting my money if it's not going to be in the bank? Well, to answer a few of those questions briefly, FDIC insurance will cover you up to $250,000 per depositor per institution, or depending on your joint ownership, if you have a joint owner's account, it's per owner. So you want to do your research on that, but FDIC does cover and has guaranteed deposits up to this limit if your institution participates in the FDIC deposit coverage. You may also be wondering, should you be keeping your excess savings in the bank? And that's really going to be very particular to your financial needs. The banking system has generally served humanity for a very long time back. And though it's going through its struggles here in our domestic Western financial system, the reality of it is banking as a whole is not going anywhere. Now, whether or not you should be keeping every dollar you have in the bank is up for debate. But when you start to think about a security preference, then it really is all about your psychology and your peace of mind. The banking system may not be the most ideal place to keep all of your money. That having been said, I'm a major advocate for relationship banking and keeping strong deposits with banks in order to leverage and maximize the access to capital and other benefits that they offer you when it comes to the use of your money. So, where are 3 major alternatives to the banking system for your excess savings and capital? Number 1, U.S. securities, government securities. This is going to be Treasury Bills, Treasury bonds, and notes, Treasury notes. Major difference between the 3 of these is going to be the maturity time. Other than that, they're serving the same function. You're essentially lending the U.S. government money, and they're promising to pay it back over a certain period of time at a certain rate. This is considered one of the safest places for your money because the U.S. government has never defaulted on its debt. Now, your personal perspective may be up in the air on how comfortable you are on the U.S. government paying you back over time, but its track record thus far has been pristine in this category. So this is one major area for you to consider. Now, obviously, these bonds are not still technically going to be considered as 100% risk-free like in, FDIC insurance, but it's still been a historically very safe place for you to put your money and still usually get some kind of reasonable return on that money. Do your homework. Number 2, a quality place, precious metals, in particular monetary metals of gold and silver. These have been known as money since nearly the beginning of time, and for sure for the last 3,000 to 4,000 years. This is the type of value that you can have and take anywhere on the globe, and it's going to be recognized as money or some form of value. It has what's called intrinsic value. So what are some of the benefits to, owning gold and silver and saving some of your capital in gold and silver? Number 1 is going to be a high demand. And what that basically means is on a commercial level or industrial level and as a monetary investment, gold and silver are often in very high demand, and they're very small markets, meaning that the supply of them versus the demand is, somewhat imbalanced in the sense that there's usually more demand than supply, or it's getting to that point, which makes it even more valuable over time. Great liquidity for the most part. You can typically take gold and silver and cash it in for whatever currency with very little to no hassle. You also are going to have inflation hedge, and some would even say inflation proof. Gold and silver are known to have an anchor, if you will, or maybe a better terminology might be a button hook to the inflation rate. So if inflation is going up, in most cases, gold and silver is going to go up with it. Now, it's not a complete one-to-one tie, but it's very, very closely correlated, meaning that you typically at some point in time will see gold and silver keep up or even outpace inflation over time. Another valuable aspect of this is the privacy you get with your money when you put it in gold and silver. At the end of the day, once you physically get it in your possession, nobody else has to know you have it. And that's a really, really valuable thing depending on your perspective on a financial system and just overall protecting your wealth without everybody and their mama having to know that you're holding it. There's no counterparty risk in gold and silver if you get the physical version of that asset. That basically means there's no intermediary to your money, to your investment, like the bank or other institutions where you can be putting your money into different investments and have to worry about a middleman cashing it out for you. At the end of the day, gold and silver is something that has its own value in your hands and can be taken anywhere in exchange for other valuable items. So there's no third party or counter risk, and that's a great thing. It's also easily passed down generation to generation. That's also a very valuable trait to gold and silver. It's usually recommended to keep about 5 to 10% of your assets or your net worth in gold and silver if you are looking for some insurance around the value of your money. This is going to depend on, again, your philosophy and financial positioning. 5 to 10% could be a lot if you don't have much, and it could be pennies, in comparison if you have a lot. So you have to do your own homework and kind of see what where that may fit for you. Number 3 on the list is going to actually be life insurance. Yeah, life insurance. This is going to be one of the safest and, most advantageous places to save your money, believe it or not. One of the most fundamental reasons for this being the case is because one of the fundamental differences between banks and life insurance companies is banks are regulated mostly at the federal level and also somewhat at a state level. And since, maybe 2007, give or take, life insurance companies are regulated on a state level. And the difference between these is that banks, due to their business model and practices and regulations, are allowed to lend out a lot more money than they have in reserves. A lot. 80, 90% plus of what they have in reserves, they're able to lend out. So that means that you put $100 in the bank and the bank can make a loan to somebody for $900. So it puts them in a really, really rough position. And that's actually what partly took place in some of the recent banking collapses. Life insurance companies are not run that way or regulated in that way. They have to pretty much keep a 1-to-1 ratio on what they're holding in deposits or, premiums versus loans that they're putting out. They have to keep a much tighter book. And they also are much more known for conservative investing strategies because they're investing in the money they're taking in is typically long-term money. So they're investing for longer-term investments and stability. They're not like banks that may be out making riskier bets on the money that they're holding. So life insurance companies are actually great places to keep your excess capital. And the most phenomenal product within life insurance is whole life insurance, particularly well-designed, high cash value whole life insurance. Infinite banking, bank on yourself. It's referred to as many different concepts, but at the end of the day, it's generally at its core, high cash value life insurance that is structured in a way that allows it to lower the commissions for the agent and allow you to accumulate a ton of cash value and lowering the death benefits you might normally get for that cash value. So it can be a great vehicle. You have to do your homework here as well. I'm going to be shooting a lot more videos around life insurance and whole life insurance, infinite banking on this channel. So stay tuned for that. But I wanted to bring you a few alternative investments that are sensible, accessible, and realistic for you to be parking your excess capital, still getting reasonable returns, and possibly having better safety depending on the financial institutions you're used to dealing with. And, also not sacrificing the growth potential for your money or liquidity with your money as bad. So I know this video was valuable for you. Thank you for tuning in. I want you guys to continue to stay vigilant on what's going on in the economy, what's going on in the banking system to the best of your ability. And one of the ways to do that is to subscribe to this channel, because I'm going to put out content and news on a daily basis on what's going on to keep you guys locked in and headed in the right direction to the best of my ability. So as always, thank you for joining me. Stay focused, stay in motion. I'll see y'all soon.